Everybody's watching the rate. Meanwhile, 2 out of every $3 of net worth in this country came from something else entirely. And last month, that something went up again. I'm Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of August 21st, 2026. Where rates sit right now. Let's start with a number everything else hangs on. The 10-year Treasury is sitting at 4.72% as we record this. Last week, it was 4.69%. The market has not closed yet today, so that number can still move a little before the bell. There is a line in the sand right around 4.71% that has kept a lid on yields for a long time. We are sitting on it. If it breaks, the next stop is 4.75%. Two things pushed yields up this week. First, oil. West Texas Intermediate crossed $88 a barrel and traded close to $89 on rising tensions with Iran. Diesel matters even more than the headline oil price. Diesel is up almost 50% since the start of the war, and diesel moves over 99% of all land-based freight in this country. When it costs more to move a box, it costs more to buy what is in the box. Second, the Treasury buyback announcement gave the bond market a lift midweek, and the lift did not hold. By Thursday, the gains were gone. Here's the outlook we are watching. The expectation is for the 10-year to stay in a range between 4.2% and 4.8% for now. That's a wide range, and we were in the upper half of it. Mortgage rates this week. Here are this week's national averages. A 30-year conventional, 6.76%. 30-year jumbo, 6.67%. The 30-year FHA, 6.31%. The 30-year VA is 6.33%. These are national averages from Mortgage News Daily, not an offer to lend. The part nobody is talking about. So what does this mean for you and your family? It means the story you're hearing is only half the story. Here's the other half. Home values nationwide rose 0.21% last month. Year over year, values are up a little more than 1.7%. And that's the strongest annual number in about 14 months. Look at the last 6 months and annualize it. Homes in this country are on pace for almost 3% appreciation this year. 3% does not sound exciting. Let me show you why it is. Take a $500,000 home. At 3% a year, that's $15,000 in the first 12 months. Over 5 years, it's almost $80,000. Over 10 years, it's $172,000. Now add the piece most people forget. With stocks, you put up all the money. With a home, you do not. Put 10% down on that same house and hold it 10 years, and the return on the money actually invested is 314%. That averages out to about 31% a year. And remember, you have to pay to live somewhere either way. This is why homeowners hold 44 times the net worth of renters. Very hard to build real wealth in this country without real estate. The rate is the headline. What your home is worth in 10 years is the outcome. You need somebody in your corner who can hold both of those thoughts at the same time. Strategy beats rate always. What Walmart really said. Now let's talk about the household behind all this. Yours. Walmart reported earnings this week. Sales grew 2.6% for the quarter, and that came in below expectations. The headline made the rounds fast, and most people read it the same way. Weak number, weak shopper. That's not what happened. The entire miss was attributed to lower prescription drug prices. Walmart fills a lot of prescriptions. When the price of what you sell goes down, your sales dollars go down with it, even if the same number of people walk through the door. So the miss was a pharmacy counter, not a shopper. Here's why that matters to you. When you have to take drug pricing out, you have to look at what people are actually doing in the store, and that's where the real story is. The number of transactions held steady. The people are still coming. They're just spending less per trip. Trade downs are up. Higher income shoppers are making up a growing share of the customer base, which is not what you see when times are easy. And Walmart received a $3 billion tariff refund and is putting much of it toward holding prices down because it has to. Walmart is the nation's largest retailer and grower. They have a very good finger on the pulse of American family. The headline said one thing, the shopping cart said another. The cart is the one to listen to. The job market tells a similar story from a different angle. New unemployment claims fell by 6,000 to 206,000, which is very low. Continuing claims rose by 18,000 and are holding near 1.8 million. Not many people are getting fired. Not many are getting hired either. The inflation number that is already better. Here's something that should give you hope, and almost nobody has heard it. Rent is the single biggest piece of the inflation reports. It makes up 18 to 19% of one key inflation measure and roughly 44% of the other. So rent basically drives the number the Fed keeps reacting to. Real-time data shows rents up 1.5% year over year. A year ago, that same measure was 2.5%. So rents have already cooled a lot. But the government inflation reports are still showing rents around 2.9%. Why? Because the date of those reports runs about a year behind. Think about what that means for your household. The inflation problem the Fed is fighting today is partly a picture of last year. And those numbers catch up. They should pull inflation lower on their own. Meanwhile, 3 voting Fed members wanted a rate hike at the last meeting. Most wanted to hold. Many said they would need to hike if inflation does not come down. All of that was said before the last 2 tame inflation reports and before the jobs report that showed losses in July. Right now, the market puts the odds of a 0.25% hike at the September 16th meeting at about 32%. Next week is Jackson Hole, and Fed Chair Warsh speaks Friday. That's the one to watch. One more number for context. National debt is now past $40 trillion and is running 20% larger than the entire economy. When your tax return hides your real income. This one is for the business owners and self-employed listening. Your tax return does not tell your whole story. If you own a business, work for yourself, or earn a 1099, your return shows what is left after every legal deduction your tax planner can find. It does not show what you actually deposit in the bank each month. That gap is why a lot of successful people get told no. We have a set of loan programs built for exactly that situation. This week, we're highlighting the bank statement loan. We use the income you really deposit before your amazing CPA or tax planner takes all the legal deductions that lower your taxable income. You should not have to choose between smart tax planning and buying a home. You can get the details at rsrlinks.com/bank statement. That's rsrlinks.com/bank statement. Featured this week. We shared 4 pieces for you this week. Here they are. Number 1, mortgage rates stay at 6.5% through 2027. Waiting costs you 3.6% a year. Number 2, inflation moved your life onto plastic. Your house never got the memo. Third, your 7.5% mortgage and 24% credit cards are bleeding you. One restructure stops both. And finally, number 4, you're sitting on $310,500 in equity. Here are 3 ways to use it without a refinance. There are several more on the dashboard beyond those 4. You'll find all of them on the right side of the dashboard or below the video, depending on the device you're using. Debt Done Date. One more tool to put in your hands. It's called the Debt Done Date, and you'll find it at rsrlinks.com/DDD. rsrlinks.com/DDD. You enter every debt you carry, your mortgage, auto loans, student loans, credit cards, and any unsecured debt. We show you several ways to strategically pay off all of it and the date each path finishes. Most families have never seen every debt they own on one page with a finish line attached. It changes the conversation at your kitchen table. Try it this weekend at rsrlinks.com/DDD. Home AI drawing. Quick note before the calendar. Anyone who joins our Home AI program by September 24th is entered into our weekly drawing for their choice of a Costco or Target gift card. Home AI is free. If you're not in the program or you're not sure whether you are, visit rsrlinks.com/myhome. rsrlinks.com/myhome to register. No purchase is required. Here's the one thing to do the moment you register. Email us and tell us Costco or Target. Don't wait until you win. Pick your card. It's $100. Send us the email. and we'll have your choice on file when your name comes up in the Wheel of Names. You do have to be part of Home AI for us to include you. This week's winner is Tracy Garcia Buenteo. Congratulations, Tracy. Next week on the calendar. Next week's a heavy one. Tuesday brings building permits, new home sales, consumer confidence, and two home price reports. Wednesday's the big day. We get durable goods, the final read on second quarter GDP, and the Fed's favorite inflation gauge, core PCE, at 5:30 in the morning Pacific time. Jackson Hole also begins Wednesday. Thursday brings jobless claims and the goods trade balance. Friday closes with the Chicago PMI, consumer sentiment, the monthly jobs report, and Chair Warsh at Jackson Hole. That is your weekend update. You can find the entire update and share it with someone who needs it at rsrlinks.com/WUC. We appreciate you listening, and we'll speak to you again next week.